Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now the price of Ethereum is potentially breaking below an important level of support. But first, let's take a quick look at the 2-hour Ethereum chart, because technically speaking, Ethereum is forming a bullish divergence. Now, keep in mind this is only on the 2-hour chart, which means it's not as significant as something like on the daily charts, for example. So this is of course only talking about the shorter term. And if you're taking a look at the last time that we saw a bullish divergence for Ethereum on this same 2-hour time frame, that was around 2 weeks ago approximately, and we saw a little bit of short-term bullish price action before one more dump to the downside, where we saw the RSI enter into oversold territories, and at that point we finally bottomed out and entered into a short-term uptrend. So that example is just to give you an idea of what is possible for Ethereum. But the most common outcomes from a bullish divergence is usually either sideways price action or a slight move back to the upside. But considering the fact that this is only on the 2-hour chart, I would not expect a significant move back to the upside based on this bullish divergence by itself. For a more bullish scenario like that to play out, I would like to see an uptrend in the price oscillators flow over to the larger time frames, like this 12-hour time frame, for example, but I'll talk about that in just a moment. First, let's take a quick look at the 4-hour Ethereum chart, because technically speaking, this rising wedge pattern, which is a bearish pattern, is still valid on the chart, and Ethereum is still playing out the outcome for this pattern, and the technical price target for the rising wedge pattern is coming in towards the bottom of the wedge at around 2,300 to 2,400. And congratulations to those of you that have taken this trade so far, because even if you shorted Ethereum after we saw a confirmed break below this rising wedge pattern, then right now at the time of recording this video, you would be sitting in some decent profits. But with any shorter term trade like this, once the position gets well enough into profits, personally I like to move the stop loss into profits as well, therefore guaranteeing that trade as a winning trade. So that is something to consider for those of you that did end up taking that trade. But here on the 12-hour Ethereum chart, technically speaking, we are still trending to the downside, and of course we still have these bearish signals on the chart that I've been talking about ever since around this point just here. So basically, I would not be surprised if we do end up playing out some more shorter term bearish price action here on the 12-hour time frame. But this shorter term bearish price action that we've seen over the past 4 to 5 days will not last forever, and of course I'll let you know the moment we start flipping some of these indicators around into the bullish direction. But if you're zooming out to the daily Ethereum chart, first of all, we've got this major point of resistance coming in at around 2.9k, and we also have this line of support if you're drawing the line from the candle closes on the daily time frame, and that line of support was coming in at around 2,600, and so far we have seen one daily candle close below that level, which is obviously a bearish signal. But at the time of recording this video, today's daily candle is testing that previous level of support, which should technically be acting as resistance now. And so basically, if the price of Ethereum confirms 2,600 as resistance, and if we get a rejection from that level, then that would further confirm a break lower. But in the most bullish scenario possible, we need to quickly reclaim 2,600 in order to turn this break to the downside into a fake out. But if you're drawing the line of support from the candle wicks, of course we have not broken that line just yet, because that line of support is coming in at around 2,300 to 2,400, which, as I mentioned earlier in the video, that is the technical price target for that rising wedge pattern. And in case you are new to this channel, the price of Ethereum on the daily time frame commonly forms these types of triangle patterns when the price of Ethereum is in its bottoming out phase, but a further recovery back to the upside on the daily time frame is only confirmed after we see a confirmed break above this point of resistance, and this level of resistance is coming in just above 3,000 US dollars. Now giving you a quick update on the percentage of Ethereum short positions on the Binance exchange and the Bybit exchange, and over the past 1 day we have seen a slight decrease in short positions on these two major exchanges relative to long positions. But this right here on the macro scale is actually a bullish signal for Ethereum. You only need to take a look at these previous examples to see what usually happens after we experience a massive spike in the Ethereum short positions. And we saw exactly this happen back in October 2020, and you can clearly see what happened next in the Ethereum price. And we also saw something very similar to this in the middle of last year, and of course you can see what happened next in the price of Ethereum. So basically what we know according to Ethereum's history is when the short positions are at record highs relative to long positions, those times in the market usually turn out to be pretty good buying opportunities if you're holding for the longer term especially. But then on the flip side, some of the best opportunities to take some profits off the table usually happen when the Ethereum short positions are at very low levels, similar to what we saw in early 2021 and also like what we saw in November last year. And right now, according to the Ethereum short positions and according to Ethereum's history, it is pretty clear what stage in the market we are in right now. But with that being said, we still cannot forget about this much larger Ethereum fractal forming on the weekly time frame. We've seen this same Ethereum fractal form twice throughout Ethereum's previous price history, and the outcomes from both of those previous fractals were bearish outcomes, but of course those bearish outcomes only got confirmed after Ethereum confirmed a break below this upward trending line of support, which right now is coming in at around 2.3k approximately. So basically, if we start seeing weekly candle closes below 2,300, then that is not a good signal. But for now, at the time of recording this video, we have not seen that just yet, but this is still something to be aware of. And of course, we also need to pay attention to what is happening in the stock market, because if we see a major stock market dump, then it's very likely that's going to transfer over to crypto prices. But on the flip side, if the stock market sees a major recovery, then that will seriously help assist crypto prices like Bitcoin and Ethereum recover back to the upside. And this right here is the S&P 500 index on the daily time frame. And currently it is breaking below our first support line, coming in at around 4290, but we have not seen a daily candle close below that level within the last couple weeks. So really we need to see a daily candle close below that level in order to confirm a break below. And our next level of support is coming in at around 4220. And at the time of recording this video, the S&P 500 index is still maintaining that level of support. And of course, we still have this bullish divergence on the daily time frame. And while the daily RSI is still making higher lows, technically speaking, this bullish divergence is still in play, and it only really gets invalidated if we see a lower low form in the RSI. But I want to make it clear that right now the S&P 500 index on the daily time frame is still clearly in a downtrend. We're forming lower highs and lower lows. So really, before we can call for any sort of reversal back to the upside, we first at the very least need to either form a higher high or a higher low. So the most bullish scenario possible for the S&P 500 index is if we simply remain above that previous low, therefore forming a higher low and playing out this bullish divergence. But until we actually confirm a higher low or a higher high on the chart, it is safer to be somewhat bearish in the shorter term while we're still in this downtrend. But anyway, if you found this video useful, make sure to drop a like down below. And if you're new to the channel, be sure to subscribe with notifications turned on for more updates just like this every single day. And before we click off, if you want to make more money in crypto, whether or not prices are going up or down, these two videos popping up right here are definitely for you. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.